Hello and welcome to the Good, Bad, and Ugly weekly review for the week ended 10th of May 2024. Some disclaimers. The more important ones is that by proceeding on this video, you are acknowledging that we are not trying to give you information that is an advertisement or a promotion to influence your investment decisions. The securities quoted are for illustration only. This week, from the Weekend Investing Research Desk, we had a case study on NBCC, some analysis on whether markets are ready for a correction, and that's what we were witnessing for a few days. The whole concept of trying to follow the price, like we say, the BBC principle, Bhav Bhagwan Che, buy what goes up, sell what goes down. Then very interesting story on non-linearity. So exponential returns in the market and how our human mind tends to walk on a linear path. And that's where the cross connection happens. Beating the narrative, a lot of times, the narratives will carry a lot of investors with them and make sure that they do some wrong decision making. Don't believe everything you see or hear, somewhat on the similar path as the previous one. See what they do, not what they say. So very important that you see the action taken by famous investors and not what they speak or what they write in books or what they keep slogans for. For instance, if somebody says buy and hold forever, they don't practice it themselves. So must differentiate between what is good for listening and what is good for doing. Respect survivorship bias, very interesting content piece there where the changing indices over decades make sure that if you were to not be cognizant of this change of indices constituents, and if you run studies based on today's index, you will find that you get fantastic results on your studies. So survivorship bias is very, very important. You need to understand that what you see in recent times, successful stocks, uh, probably did not exist 20 years back, or those that were successful 20 years back, many of them don't exist today. So surviving in the market itself is a major issue that one should look for. As Apple topped, another case study on Apple post its huge buyback, and it just takes one man to change history. So some historical lesson on how JFK, or sorry, Nixon, changed the world history by taking the gold of the dollar backing. So download the Weekend Investing app. It's available on Google Play, available on App Store. Uh, and don't miss any of these content pieces. They may not impact your daily market investing routine, but gradually you will get exposed to newer ideas that may help in streamlining your thought process and maybe discovering something new. It is just good reading. Nifty this week, uh, totally one directional. Uh, Last Friday, we hit a new high at 22,800, and this Friday, we've closed at 22,000. So we've lost pretty much 500 points from previous week's close and about 800 points from the top. A good sell-off, I would say, a good correction. Always good to have periodic corrections in the market, but right now there is nothing more than that. On the weekly, yes, the last 2 weeks candles failed to move up. So we are still in this congestion zone that started from, you can say, end of February. So 22,500-600 on the top and 21,700-800 on the bottom. That this congestion zone is continuing. Uh, the good support that can really come around is 21,200, somewhere around here. Or if things go a bit hoary, we can come down to maybe 20,000. But I don't think there is too much of scope of a fall unless there is a major surprise in the market. Benchmarks Nifty down 2%, CNX 200 and 500 down 2.1 and 2.3%. Nifty Next 50 down 2.8%, and mid and small caps were butchered 3.2% and 4.4% this week. So a significant cut here in the lower part of the market. In terms of weekend investing strategies, also cuts were from 2% till 6%. Some of them really cutting deep in ATH2, MI20, MI35, and NF10. Overall, uh, most of the strategies still have some green on FY25, ATH2, and MI25 along with MIR cap are in the red. Sectoral overview, all sectors in red except FMCG plus 2%, autos at plus 1.4%. Autos have done well, numbers are coming out to be good. Consumption is stable, so consumption stocks have not fallen, which is a good news. There is also news that rural consumption is picking up faster than urban consumption, which is always good news for India. IT remained stable this week, although in this financial year, IT has been the worst performer, and all these sectors were down 2% to 6%. PSU banks losing most of the gains made in this current financial uh, this week. Metal still ruling the sectoral list at plus 8.7%. So autos, you can see across different timelines, autos is at the top. Public sector enterprise is right next. Gold has come up in the last few months. Gold is also keeping up. Consumption stocks are not falling, so look out for consumption stories. FMCG, metals have dropped in the very short term, but overall are in the top five sectors. In the weekend investing strategy spotlight, uh, how momentum investing is hell bent on making best use of your capital. This we will showcase that. So Masdoc is the example that has been chosen. Goes through a choppy phase between July 21 and August 22 before finally breaking out in August 2022. This is where MI35, this the rotational strategy which focuses on small caps, picks the stock. And you would imagine, a stock that is ranging between 230 and 320 to maybe, go up 20, 30, 40%. But Masdoc goes through a huge re-rating, goes from 350, goes to 2193, gains of 520%, and we exit in September 23 once it starts to cool off here, and you basically avoid sitting through this pain of next consolidation phase. So huge gains happening purely because the algorithm will detect which stocks are the strongest in the small cap 250 uh, basket. Uh, uh, and essentially this phase of September 23 till even now May 24, last 9 months, it's just been very, very range bound. So this strategy basically detects on different time scales how the momentum score is keeping up, and once it finds that the momentum is waning, it will get out of this and move into stronger stocks if they are available. So if there were no other stronger stocks available, it would still remain here. But if there are stronger stocks available in the pack, it will definitely move there. So this is how MI35 moves over a period of time since it went live. Uh, MI35 is up 136%, and the base index is up 68.2%. So the universe is small cap 250, the 35 stocks in it, so equal proportion to start with. And every 6 months, as the underlying index rotates, the weights are reset back to equal weight. Every week, there's a review of the strategy, and if there is any change required, that is suggested. Outlook should be 4 to 5 years if you come into this kind of strategy. So, this is all I have for today's Daily Bite. Thank you so much for watching this and being a weekend investor. See you in the next week's edition. Thanks. Bye.